What is credit scoring? Credit scoring is a difficult thing to understand, and most people, unfortunately, aren't taught about it in high school or college, and trying to improve your own credit score can be very challenging at times. According to the industry, credit scoring is a statistical analysis performed by lenders and financial institutions to determine the creditworthiness of a person or a small owner-operated business. So let me give you some guidance and 10 tips on how to improve your credit score and become loan ready. Number one, pay all your bills on time. Payment history is the most significant factor in your credit score and accounts for 35% of your score. Here's a little tip. Set up automatic payments or reminders to ensure you never miss a due date. Number two, reduce credit card utilization or the amount of credit you're using compared to your limit. It's the second most important factor in your score. And you should always aim to keep your credit utilization ratio below 30%, ideally below 10%. But if you can keep your credit utilization below 50%, you will gain positive points each month on each account. Number three, avoid opening new credit accounts frequently because each time you apply for a new credit, you receive a hard inquiry on your credit score, which can temporarily lower the score. So only apply for new credit when it's absolutely necessary. And number four, check your credit report regularly. Errors on your credit report can happen and they do lower your score. Sometimes you can have collections on there that aren't necessarily supposed to be there or could have been resolved that are still hanging around. So check that credit report. There are free apps you can have to check all three of your scores. The bureaus are Equifax, Experian, and TransUnion. And every American gets a free credit report from www.annualcreditreport.com that you can pull at any time to check your own credit history. It's free. Number five, pay off debts instead of moving them around. Paying off your debts rather than transferring balances to avoid debt shows that you're managing your credit responsibly. So focus on paying down your debt with the highest interest rate first or the smallest balances for the biggest effect on getting rid of debt. Number six, keep old accounts open. The length of on your credit history is 15% of your score. So the longer you've had a credit account, the better it is for your scoring. And even if you're not using the account, keeping it open to lengthen that credit history is probably a good idea. Number seven, diversify the kind of credit mix you have. Having a variety of credit types, like a credit card, an auto loan, and a mortgage can positively affect your score, accounting for almost 10%. Probably the best balance is 2 credit cards, an auto loan, and a mortgage. And don't take unnecessary debt, but a variety is good. So number 8, limit hard inquiries. When a lender checks your credit after you do a credit application, it can lower your score temporarily. You typically gain those points back after our next round of bill pays, but it does sometimes have an impact on your score. So if you're shopping for a loan, do it within a short period of like 14 to 45 days, as multiple inquiries within that window of time are usually treated as a line inquiry instead of having multiple. Also, you can ask your lender if they can do a soft pull. At Guild, we have the ability to do soft pulls, which doesn't have an impact or an effect on your score at that time. Number 9, consider a secured credit card. If you have poor or limited credit history, a secured credit card where you provide a deposit as collateral can help you rebuild or build credit. You can also become a joint user on another person's credit card and inherit their good or bad credit, so be careful who you ask. And then be responsible using low utilization and pay that balance in full monthly. And lastly, number 10, become an authorized user. As I just mentioned, someone else with good credit can help you gain your credit share without having to be responsible for the actual card account. Ensure the primary card holder pays their bills on time and that the issuer reports authorized users to credit bureaus. So those are 10 really strong tips that most people can do, and they will see a huge benefit and increase in their credit score. The good news is if you're looking for a mortgage and you work with a lender, we can sometimes guide you, and we actually have some experience in credit coaching, and we can help you with these steps and show you what to attack first. Anyone that desires a higher credit score, if they're properly motivated and follow these top tips, can become loan ready. And we are happy to work with people who are credit challenged now or who have poor credit or just new credit to help them become loan ready anytime. So please feel free to reach out and we'll show you how we can do it. I hope this has been helpful. Let's get ourselves loan ready. We'll talk to you soon.